Okay, so we've got this looming debt ceiling, and we heard essentially nothing's. We'll hear a little bit of news from staff members having meetings over the weekend, but Biden and the principals aren't going to meet until early next week, and they have a very short time frame before Biden leaves for, I believe it's Asia, to come up with some deal. If they don't, there's high risk of at least a technical default sometime in early June. That's going to cause, volatility, fear, etc. Particularly if it looks like they're not going to come to a deal and we're going to at least go into a technical default. So a lot of the discussion, a lot of the news is going to be, are we going to default? Aren't we going to default? What's the probabilities? So I expect, increased volatility. Again, we've seen the VIX has been, it's still below 20, so we're not seeing the volatility yet in the VIX. But as that fear increases, we might see an increase in the VIX and volatility. Obviously, our preferred play on volatility is using UVXY, which is the leveraged ETF on the VIX. We're already long UVXY, but if again you want to play that, and we've got a couple other ETFs we can look at tomorrow on how you can play the increase in volatility, both long and short. Significant downside risk. So you definitely want to protect yourself against a potential downside risk. In 2011, which is the last technical default that most people are comparing the current situation to, the markets went down 20%. So again, you definitely want to protect yourself, whether it's hedging with volatility, whether it's shorts, puts, etc. Stops. Definitely, we want to protect our capital against that potential. The probability of such a default, they're currently betting using default swaps at 4 times the rate of 2011. So they're saying there's a 4 times probability of what they were betting that we're going to have some kind of default compared to what the bets were in 2011. So, the probability is non-trivial. The downside risk is significant. So again, make sure your capital is protected. However, you want to best hedge against that potential risk. Again, shorter term bonds, anything that's bridging this potential default, be it a month, a couple months, those bond yields are much higher. So those prices are much lower. There's a lot of selling pressure in some of the bonds because of the risk. And we'll talk about some of the risk to the treasury bonds as well. So what happens or what are some of the potential consequences of even a technical default? Well, one of the things they could do is shut down government services. So shutting down government offices, closing parks, etc., which means those people essentially are not getting paid. Those services aren't available during that time. So negative consequences based on that. So obviously any of your companies or stocks that are dependent on some kind of government service could be negatively impacted. Government contractors may not get paid. So that's defense contractors, any consultants, contractors that work for the government. They might not be able to get paid for a while. And again, that may have a negative impact on those companies. I don't know if any of you remember or were around during the 2011 default and the subsequent sequester, but that definitely put a cap on the defense contractors. So again, watch for some negative impact in defense contractors, other government contractors. So, Social Security, and this will be very negatively received, is if Social Security recipients don't get paid or others receiving government assistance can't get money, be it SNAP recipients, etc., if they can't get the money that they're normally receiving, that's obviously going to be societal, very negatively received, a negative impact. Non-essential government spending like infrastructure could be put on hold, and the Speaker of the House wants to cut, so things may get cut. And if your stock, or if you bought a stock based on something with the infrastructure bills, spending, etc., that may either get put on hold or it could go away. So again, risk to those types of companies. Just be aware, act accordingly. Interest payments on some bonds might not be paid. So some of those short-term bonds, they might not. That interest might not get paid in the near term, and a true default would be if it's not paid at all. And obviously, that would have significant negative consequences. Borrowing costs. If the U.S. gets a credit downgrade again, borrowing costs for everything go up because the risk goes up. So business loans, personal loans, essentially it's the equivalent of an interest rate hike, because even though the base Fed interest rate doesn't go up, the overall interest rate that people are charged for a loan will go up. And so again, it'll have the same impact as a abrupt interest rate hike. Potential for higher unemployment. Again, as all these negative consequences hit during the sequester, government defense contractors laid off. They offered retirement packages. They reduced workforce. So again, if this negatively impacts the economy, we'll probably get higher unemployment, and this might accelerate our decline into a recession. So one of the things, again, I was talking about silver and gold. I hypothesize that we might see a rush to stores of value because, like, bonds not getting paid, etc., is and potential risk to stocks. So you've got risk in stocks, risk in bonds. So where do you put your money to secure it? Well, typical flight to safety store of value is gold, silver. So again, gold and silver had a major decline. So I want to go and look very quickly at what happened to gold and silver in 2011. So if we look at the very long-term chart of gold and we look at this previous peak here, that's 2011. So again, there's a high possibility that if the risk of this looming debt ceiling, looming default increases, the fear of that increases, we may see a flight back into gold and silver. So there's gold, 2011. We look at silver, see the previous high, boom, 2011. So again, that's where I think there's some significant opportunity as this debt ceiling looms, as the fear potentially increases. People try to preserve their capital. I think one of the places they may head is gold silver. We saw again gold silver decline. So again, I think there may be opportunity there. So let me know what you all think. I'd love to hear your feedback as well. As where do you think people are going to try to hedge their risk against this looming debt ceiling? The content of this video was produced by BeachBum Trading. We hope you will choose to also join us in the BeachBum Trading community and subscribe to our YouTube channel. Visit us at our homepage at beachbumtrading.com, the bum without the U. Similarly on Twitter, BeachBum Trading, bum without the U. On Facebook and in our BeachBum Trading Facebook group. Please follow us on Pinterest and on Instagram. All of the links to our social media sites will be included in the description box below, and we hope you will choose to subscribe to our BeachBum Trading YouTube channel and follow us on social media. Thank you. We also cordially want to invite you to our new BeachBum Trading Community Discord server, where we can have discussions on all topics related to trading, success in trading, investing, etc. You can see alerts when we make trades, changes to our watch list, etc. So again, please join us in the new BeachBum Trading Community Discord server. You should be able to find a link in the description box below. You can also find a link in the social media category on our webpage, beachbumtrading.com, without the bum without the U. and also in the link section on the About page of our YouTube channel, etc. So again, we look forward to seeing you in the BeachBum Trading Community Discord server soon. Wave and say hello. BeachBum Trading also now has a site on Patreon. If you are willing and able to help support our efforts to produce all the content and help you achieve the financial freedom you want, deserve, to be able to live the beach bum lifestyle or any other kind of lifestyle you would like, and you're willing and able to help support our efforts in these regards, we hope you'll choose to visit our Patreon page. You can get access to our new BeachBum Trading Community Discord server, which is currently under construction, but you will get access to the Discord server by supporting us through Patreon. Again, this is all currently under construction, but you can see we just have the default levels, membership levels, but again, each level allows support, allows access to our Discord. We're also posting our trade positions initially in our Discord, and again, we greatly appreciate any support that you're willing and able to provide. So thank you for your consideration. Another way that you can help support BeachBum Trading and being able to produce frequent quality content for you for free on YouTube, etc., is in addition to subscribing to our BeachBum Trading channel, hitting the like button on our videos, and hitting the notify so you're alerted when we release further videos. You can also choose to show your support for BeachBum Trading with a super thanks, which you can find below this video. If you hit the heart with the $sign, the super thanks, again, you can financially support BeachBum Trading in whatever amount that you wish, and we greatly appreciate your support, and that will help us, again, be able to produce frequent quality content that we can provide for you and all your fellow beach bum traders around the world for free on YouTube. So again, we greatly appreciate all of your support, and thank you very much. Thank you again for watching our video. We hope that you liked it. If so, please smash the like button, give us a thumbs up. If you're not already subscribed, please consider subscribing to our BeachBum Trading YouTube channel. Please share this video with your fellow traders and friends. And please give us your feedback and any recommendations for improvement in the comments section below. And let us know what else we can do to help you in your trading career. Thank you again, good luck, and have a great trading day. If you like this video, we hope you will choose to subscribe to our YouTube channel by clicking on the box in the upper left-hand corner. You can watch another video like this by clicking on the box in the lower right-hand corner. And we have a whole playlist of videos like this that you can access via the box in the upper right-hand corner. Our latest video is available in the box in the lower left-hand corner. We hope you like this and have a great day.